Hello and welcome to Café New Canadians, all about filing taxes in Canada. This is Café New Canadians. Café New Canadians is a virtual chat series where every week we bring topic that matters to international students, immigrants, all newcomers, and also who plan to come to Canada. And Café New Canadians is brought to you by New Canadians. You can watch us on newcanadians.tv. Also, subscribe to our YouTube channel. And all the audiences who join us from Canada can watch us on Omni Television. So in today's session, we'll talk about taxes. And this session is brought to you by Windmill Microlending. As Canada's largest microlending non-for-profit for skilled immigrants and refugees, Windmill addresses underemployment of skilled newcomers across Canada. And you can log on to the website windmillmicrolending.ca, and we'll talk about this option as well. Talking about taxes, as we all know that this is a civic duty for everyone, whoever lives in any of the country. So as a new immigrant in Canada, there are many processes one learns at different points in their journey in Canada around this time of the year. Specifically, this is called taxes season. It's usually how to file taxes is the most important question everyone comes up. Whether you are employed, self-employed, or an investor, this session is for you. This would give you a guide how to file taxes and what are other things related to that, how to track your receipts and other documents. We'll talk about in detail. So my name is Sherdal Khan. I am today's moderator for the session, and we have a very important guest with us tonight. Let me introduce Subhash Sharma, CPA. He is a principal at Bronte Bay Professional Corporation. Welcome to Café New Canadians, Subhash.
Thank you, Sherdal, and thank you, Gerard, for giving this opportunity. So I'll be happy to share my next few minutes.
Definitely.
So, yeah.
And I welcome you all who are joining us from YouTube and also joined us through Zoom. And do send us your questions through Zoom, and we'll try to get the answers for those questions. And there are some questions that we have also got before the session. So we'll talk about taxes in detail because it's sometimes it's called very complicated, this process, how to get the numbers, how to get the real information about filing a tax return or paying a tax. So first of all, I would ask the most important question of all time. Why we need to file taxes, Subhash?
Well, that's a good question, and also it is an important question because first of all, it's a requirement. So it's not much of a choice. As a Canadian resident, whether you're newly landed or you have been around for a long time, you're citizen or permanent resident, you're required to file taxes if you have income either in Canada or anywhere else in the world. So your worldwide income is taxable here in Canada. So that is the first main requirement. It's not a choice, so you have to file taxes. And secondly, a lot of people, so there is a little bit of exemption before I go any further. So if you did not make any money anywhere in the world, you can not file taxes. So that's the option you have. But there's no reason for not to file, because by filing taxes, you actually get benefits from the government. So government gives you some money as a refund. It is, if you're in Ontario, they give you Ontario tax benefit. Ontario Trillium Benefit, sorry, and the federal government gives you GST credits, and if you have children, they give you child tax benefit if you have no income anywhere in the world. And also, but there's a little bit caveat there, so it is a family income combined. So not that one spouse has no income and the other spouse has 100,000 income. So they take your total family income and determine the benefits. And second reason could be that if you made a little bit of money, let's say you worked for some hours and got, let's say, $10,000, just to give a simple number, and there were some tax deductions out of that income. So CPP deducted, EI deducted, and tax deducted. So all those deductions will come back to you if your total income does not exceed about $13,000. So all the CPP deducted, the EI deducted, the tax deducted actually gets back to you as a refund. And in addition to that, you also get the Ontario Trillium Benefit, you get the GST credits, and also you get the child tax benefit, right? So there's all good reasons for filing taxes in Canada. So maybe it's a hook by the government, like some people can argue, yeah, they want you to be in the system, because if you stay out of the system, they don't know you. So once you come in the system, then they can know your full history. But from the from the taxpayer side, it is a good thing to file taxes because they call it actually taxes and benefit return. So benefit is combined with the taxes in Canada.
Right. So is there any time limit? Because if somebody landed here before that year, like a complete year, didn't spend a complete year. So in that case, is it also mandatory for that person?
Yes, it is mandatory. Even if you landed on December 31st, you're required to file December 2020 taxes in 2021. But you get the benefits even if you're here for a day. So they are prorated, they are not full benefits, but still you get some money back from the government.
Right. And let's start about talking about the critical part of it. What, like this season, what is the deadline to file the tax, whether you are employed, self-employed, or an investor? So what are the deadlines? How much time we have right now to file taxes?
We're talking in good time. Actually, April 30th is the deadline. CRA has not extended so far. Maybe they will, because they're having a lot of technical hiccups, and a lot of hacks have happened in the recent past, and they are behind in most of the processes. So I'm assuming they will announce some delays, but generally speaking, it is April 30th as deadline for most Canadians. And the only exemption being that if you're a self-employed individual, your tax deadline is extended to June 15th. But that is for the filing, but the payment still is April 30th. So I would rather say it is April 30th than June 15th.
Okay, and most of the times people ask this question, can we do this on our own, or we need a professional help for that?
So the answer is yes and no. If your income is very simple, if you just work for an employer, you got a T4 slip. And in addition, you may have the RRSP slip or a donation slip or two. And there could be multiple T4s and multiple donation receipts and multiple RRSP receipts. But as long as they are defined receipts, you can absolutely file taxes yourself. And there are free software available. You can go to CRA online, CRA website, and just Google search Canada Revenue Agency. The CRA website comes up, and they have something called NetFile. So you don't have to be very technical savvy, but a little bit knowledge about computer. And most people can actually do the NetFile, as long as you have very simple, basic return. Now, I didn't mention the dollar amount. So you could have made $100,000 or even $200,000, as long as it's a T4 slip, because the CRA system recognizes those slips, and they probably already have a copy of it. So the tax filing is very simple for those individuals. So, but if you have investment income, rental income, foreign income, or assets abroad, then you're better off talking to a tax advisors.
All right. And also I want to know, how can somebody get the rates of the taxes, and what are the brackets and everything?
Well, Canada's system is based on marginal tax rates. So there is a spreadsheet I prepared, updated. If you want to bring it up, we can show that. And I can explain the basics, how it works.
Yeah, we can have it, and here it is.
Yeah, so this is updated for 2021. Actually, I'm trying to be a little bit proactive because I normally update it every 2-3 years. Usually it doesn't change a lot. Only the first column changes slightly with inflation. So every year they update the tax brackets. So when you see the first row, is taxable income, and the first $45,142, and the tax rate is 20% on this. Right. So the next column, when you see, is 20.05, and as you go up from there, $45,142 to $49,020, your tax rate goes for 24.15%. But it goes for only that particular amount, which is between $45,142 to $49,020. So it doesn't go up for the whole amount. And then as you keep going up in this scale, and as you end up on the top tax bracket of 220,000, for example, your tax bracket goes to 53.53% tax. But there's a lot of misconception about this area. People say, oh, Canada has very high taxes, and they are actually. I don't want to pretend they're not.
And if somebody wants to go around on internet and want to have this document, this spreadsheet, how can somebody can get that? We can also share it with our audience, but overall, if you want to tell our audience that what's the easy way to get this?
Well, unfortunately, there's no easy way. So there is the government always tries to make it a little bit more complex than it should be. So there is federal rates and there's Ontario rate, or if you're living in BC, you have to think about federal rates and BC rates and so on and so forth. So you have to combine the taxes of federal and provincial to come up with this kind of rate. So it's not very easy. And also federal rate has 4 brackets or 5 brackets, and each province has its own brackets kind of thing. So this sheet I made only for Ontario, right? So there are similar sheets available for each province. Okay. But it needs a little bit of digging. But by all means, you can share this sheet online. It's available for download, make it available for download. Anybody watching or listening can download it very easily. Right. And also, it does change every year. So it's not a constant, it's not a fixed document. It changes every year. You have to look it up for updated one. You have to look at it for the latest one, yes. Okay. What are the documents, and usually we call it receipts and statements that we need for filing tax at the end of the year? Is there any track of that documentation as well? Yes, so most of the employers do file in time, and the time is 28th of February. So by February 28th, all the employers are required to file T4s to CRA. So CRA gets a copy of what you get in the mail or by email. So CRA already has the data for most of the taxpayers, right? But that doesn't mean that they have all. For example, if the employer was late, they filed their T4 summary on 5th of March, for example, or 4th of March today. So if you download, CRA will not have that information, right? So in that case, you have to see the physical T4 slip which you might have got. So that is for the employees. Okay. If you're working as a self-employed, you will get it something called T4A. So similarly for RRSP and donations and everything is supposed to come to you within the month of February, but usually it comes by 15th of March or something. Most of the year, yeah. So these are the documents. So specifically for self-employed persons, if we want to go deep into that, because there are some deductions as well, and there are some benefits that they can claim, like if they purchased an equipment for their home office or for their office. So in that case, what are those documents that one should have before filing? Absolutely. So the law is that CRA requires everybody, the taxpayer, to keep the bills and receipts and proof of payment for 6 years. Okay. So, and the law is actually that you should be able to present the original bill and receipt and also proof of payment. But in the last few years, as a practice, CRA has been asking these things as PDF files, which means you can actually scan them and put them in something called Receipt, some software like Receipt Bank, or even save it on your soft drive, some Dropbox or Box.com or Sync.com. There are various software where you can save all your data, but you should save them by years, like 2020, 2021, and so on, so that when CRA asks for it, you should be able to provide that right away. And because the CRA has now allowed e-filing and net filing, actually they are not only allowing but actually encouraging people to e-file or net file. So they say that don't send us any document, keep the documents with you. And
Okay.
only when we ask, you should be able to provide.
What's the difference between paying a tax and filing it?
Well, paying is simply just paying advance payment. So you can pay, let's say $5,000 as tax. You pay them $5,000. It goes into your installment account for that year. But then at the end of the year, you're required to file a tax return, which is basically a reconciliation of all your payments and what is required to be paid. So if you have paid $5,000 in advance, but you're required to pay only $4,500 in taxes, $500 will come back to you. On the other hand, if you are required to pay $5,500 and you have paid $5,000, you'll be required to pay $500 by April 30th.
All right. And for this, the date varies, or you can update that later when the time is there for filing.
The deadline is constant. So it has been around for a long, long time, as long as I have seen it. So it has been April 30th for all payments. So that usually doesn't change unless only one time the CRA system actually went down around 25th of April. And like nobody could file, nobody can access CRA systems to do anything. So they did extend by 5 days or something. But usually you can think it is written in stone because they updated their system. They added thousands and thousands of servers so that it doesn't crash.
So further we go to specifically for employed, self-employed, and investor. There is a question. It says that I am a newcomer, once landed in Canada back in 2018 and stayed for 12 days and then left and came to Canada permanently on September 20th, 2020. So in that case, what are your suggestions how to tackle that?
So when a person comes, the general conception is that a person comes to live here. So that's called PR, permanent residence. So most people come with the intention to live, but some of them do leave. Like I was one of them, actually. I did leave and came back after a year. So some people like come, get the health card and all the necessities, driving lessons and so on, and then go back. And then they are there for 2-3 years and then they decide to finally come back. So when you're not in the country, you can be considered as a non-resident, but depends on the facts of the case. And the facts of the case are like, do you have any residential ties to Canada when you're living abroad? And one of the biggest residential tie is that if you have family living here. So for example, husband decide to go and earn money somewhere in Dubai or India or Pakistan, wherever you come from, but your family is here, right? So basically, the government's thinking is that you're enjoying the facilities here in Canada, your family is here. So you're considered to be a deemed resident, even if you're not living here. But if you have no residential tie here, you can actually go out and live abroad for 3 years, 5 years, 10 years, and then come back. If you're a citizen, for example, you can come back and you'll be considered non-resident for that period. Any money you earn abroad is non-taxable here. But if you're a deemed resident, you file your worldwide tax return for your worldwide income and pay taxes here.
Okay, let's go specifically for employed person. What are the steps you want to suggest, you want to tell, you want to guide all the people who are employed and want to file taxes?
Well, if you're employed, the life is quite simple. So you usually get a T4 at the end of the year, probably by February 28. One copy goes to CRA, one copy comes to the taxpayer, and you just use NetFile or any other software if you have any preference, and just file your return. Very, very simple return. Takes about 15-20 minutes if that is all you have. And again, dollar amount is not important. So it could be 10,000 or 200,000, $500,000. So if you have one T4 or 5 T4s and have 1 or 2 or 3 RRSP receipts and few donation receipts, very simple tax filing, irrespective of the amount. But if you have any other complication like investment income, foreign assets, then it is a little bit complex. And then you need a tax advice.
Okay. And if somebody is self-employed, in that case, what are the steps he or she has to take?
So self-employed, again, the requirement from the government side is that when you pay as an employer, when you pay to individuals anything over $500 in the year, you're required to give T4A. But CRA has never audited, never came back and penalized people for not preparing T4As. T4, there's a heavy penalty for not preparing and filing. But T4A has been a gray area. So a lot of employers actually don't give any T4A. So in that case, your statement of account from the employer or whatever document you have it, a letter or whatever you have it. If you have nothing else, you may have your deposits in the bank. So you total them up, so that becomes your income. And then you see what are the legitimate expenses to earn that income. And that could be even more than income. So in some cases, you could be even losing money. Let's say you started a business, and that's not abnormal. Like in the first year, most businesses do lose money. So whatever legitimate expenses you can document, you can show bills and receipts and proof of payment, and also they belong to that income, like they are related to that income producing activity. So you can claim all those expenses.
And there was a question before our session started from Harshan, and just wanted to let our audience know that whoever is watching us through YouTube can also send us their questions in the comment section. And we are getting the questions from our Zoom attendees as well. Harshan wanted to ask if a person,
Sorry.
no problem. If a person self-employed and have a full-time job too, when they file tax return, both info and returns will be filed together as one. But we need to file GST return separately. What are tax deductions? So the first question is, do we need to file GST return separately for that?
Absolutely. So GST is a separate return. It's a separate department, separate set of people who handle all these GST affairs within Canada Revenue Agency. And GST return is also available online. It can be filed free of cost by using something called NetFile. It's a different NetFile system on CRA website, but it's free to file. So all you need to do is report your total revenue, like not the net income, but the revenue, and also how much HST you collected, and if you paid any GST on the expenses. So you're allowed to deduct the GST which you pay on expenses and net it out and pay only the balance amount. So as an example, if you collect $100 in GST over the year, but then in your expenses you have paid $60 GST on expenses. So all you owe to the government is $40, right? On another note, if you have paid more GST on your expenses, for example, you set up a business, you buy this machinery and equipment and whatnot, but your sale was not that great for the year. You're just starting off. So you paid more GST than you collected, you will actually get a refund for GST, ITC. So it's called ITC input tax credit. And it's a netting kind of thing. It's a separate account for accountants minded people. It's a balance sheet item. So you just track it separately. As a GST registrant, you have to register for GST. So as a GST registrant, you're working as a CRA agent and keeping track of that money. So that money belongs to government and you just pay them off.
Okay. There's a question on YouTube from David. He wanted to ask, if I work as a freelancer, do I need to register as a business in order to eligible for tax benefits?
So that's a little bit more complex than it sounds, because if you just operate under your own personal name, there is no registration. So for example, me, Subhash Sharma, yourself, Sherdil Khan, no registration required. But when we start to add something to it, like Subhash Sharma Consulting or Sharma Shoe Shop or something, then registration is required.
So in that case, your GST number, and you have to file the GST separately on that case.
Absolutely. So in either case, GST is separate. So whether in your own name. So when I mentioned the first registration, it is registration with the ministry. If you're in Ontario, with the Ontario Ministry, if you're in BC Ministry of Small Business. So that is called registration. It's called Master Business License to operate.
On Western Road in Woodbridge.
I'm
It
sorry.
happens every time.
Siri gets excited. I'm sorry about
It's
that.
okay, Papa home.
So
Yes, sorry about that. So first registration is to be able to operate a business, right? So that is registered by the ministry of a province. And the second could be city license. So these are all different pieces of starting a business. So it could be a city license, depending on where you are operating, which city you are operating. If you're in Toronto, for example, you have to go to Toronto, city of Toronto, and get a license to operate a business. But that usually applies if you have a storefront or a warehouse or a factory where it's a physical location to it. So you go for city license. And the third thing is the GST HST number.
and if you are working from home and giving services, in that case,
No city license required. So please
Okay.
don't call the city and mention my name, because if you call them, they'll say yes, it is required. But they have never come to me and say, oh, you must have a license.
okay. There was another addition last year. Like some of the individuals who laid off from their work, and they were eligible for emergency benefits, CERB, and other things. All about those benefits, are they liable to file taxes on that?
And absolutely, and unfortunately, yes, because all the CERB, CSB, CRB, so whatever benefits you got from the government for COVID, they're all taxable at your marginal tax rate. So whatever highest tax bracket you come in, you will pay tax on that.
And how to keep track of that, and how to let CRA know about that? Do we have to produce anything for that?
Yes, so government has already started to send T4A slips for that. So most people have received them. If not, you will be receiving them in the next few days. So it's a T4A slip which gives the exact amount of how much they received.
There is another scenario. People wanted to ask, like if you are employed and or self-employed and you have some dependents with you, in that case, how the brackets change in that case?
Well, the brackets themselves don't change with the number of dependents or spouses, but each spouse have their own brackets. So one person could be in the highest top bracket, paying 53.5% tax. Second spouse could be paying 20% tax. And children don't factor in that bracket at all. So there are other things for children like GST credits and things like that, but they don't count in the brackets.
Okay. Now, what about investors that you initially mentioned that there is very complex and very complicated scenario in that case? So how to easily tackle those questions, those things, if you are an investor and want to file taxes?
So for investors, the life is a little bit more complex. It's unfortunately, it's very, like there's no easy way, there's no simple way, because there is no, well, there are slips, like if you invest money with the brokerage, for example, at the end of the year, they do provide T5 slips, T3 slips, and so on. So that part is the easy part. But if you have investments and you're using some do-it-yourself platform to invest in stocks, for example, then you're in hard territory, because you're required to gather all the data and collate it and properly calculate the actual gain or loss in a transaction for each transaction. And if you ended up doing like 10 transactions a year, it's easy. But if you are trading regularly, especially for people during COVID last year, a lot of people actually sitting at home and thought, oh yeah, this is easy, let me do something. And they buy and sell and buy and sell. So each transaction has to be tracked separately. So they are all separate transactions, and you have to calculate profit or loss for each one. It's called capital gain. Half of the gain is taxable. It's called taxable capital gain.
There's a question. It says that I filed tax for 2019 and show worldwide income. Is this going to change anything extra?
I'm sorry, I didn't get it because I got distracted with the question.
I
I'm
just
sorry.
wanted to know, like, what about the worldwide income? How to tackle that and how to keep track of that? And on that, do we have to pay extra?
Yes. So worldwide income is taxable in Canada. So even if you made, let's say, $100 back home or in a third country, wherever you had any business dealing or did actually work there or invested money. So if you invested money, you probably got some interest or dividends or even capital gain on those investments. So they are all to be reported in Canada. And you may or may not have any slips which are compatible with Canadian system. And also maybe the tax filing dates are different. For example, I come from India, and over there we have April to March as the year, fiscal year. And here we have January to December calendar year. So when you have that kind of situation, it's really, really complex because back in India, they have not even filed the taxes, and we are required to file it and report income over there. So it's a tricky situation, but still we have to do our best. So one good thing about CRA is that they say that if you don't have any information, you can give a ballpark number. So as long as it is close number, they will take it. And if it turns out to be slightly different, they will say, okay, that's fine, because you did not have the information. You did your best to provide the information. But if you're claiming any tax deduction, tax paid in a treaty country, then it becomes a little bit tricky because they want to see the actual tax return filed and also a assessment in that country, without which they will not accept the tax paid over there as a deduction.
Right. And you talked about expenses. What are those expenses that we can mention in that, and we can get benefit out of that?
So investments, if they are paper investments or financial investments, it is simple because usually there are not much expenses. Maybe there's management fee, or maybe there's interest to borrow money, which is deductible. But when it comes to rental properties, then of course you can deduct all the legitimate expenses related to that property. So one thing which is not deductible is the travel expenses. If you say, oh, I want to go back to my home country and meet the tenant. So they say, no, that's not allowed.
Okay. There's another scenario that I wanted you to address. If somebody who is new to Canada and brought some money with them from their country of origin and started studying here or got some loans, in that case, is that person also liable to file taxes on the money which he or she brought or got the loans in that case?
No. So the good thing is that, so the good part is that whatever money you bring is your capital. So it's considered to be tax paid money when you bring it. And if you borrow any money, there is no tax on that because it's a borrowing. So in accountant speak, that's a balance sheet item. It's not an income statement item. None of them is income. So same status for gift. For example, your parents pay you tuition fee to study here, so that's non-taxable. Or if you got inheritance, so that is non-taxable here. But other than that, any income is taxable. Worldwide income is taxable.
So if nothing is available, nothing to file, nothing to declare, in that case, what is the process?
Well, the process is to file nil return, and the government has given exemption. If you don't like to file, you say, "Oh, I don't want to be bothered with filing." They say, "Okay, yeah, if you have no income, neither in Canada nor anywhere else in the world, and you have no assets abroad, then you don't have to file tax return. But then you're leaving some money on the table in the shape of benefits."
Okay, and like if somebody is new to Canada and and doesn't have any CRA login. But in that case, like for the first time, how to file taxes in that case and get the CRA login?
Well, it's very easy to call. Like these days, I shouldn't be saying that. These days, it's really hard to get hold of CRA. But generally speaking, very easy to call CRA, and they send you a tax package. They give you access code and everything, or you go to a tax preparer and file tax return. So you can just walk nearest place, any mall nearest to you, and there will be a H&R Block or some other tax preparer who will help you file these things.
And if you want to consult an application, because there are so many softwares applications available for that, so it's always tricky to use them. So what do you suggest? How to and which one is easy to use, and how to handle those application softwares?
So again, if your income is basic income, like a T4 income with a receipt or two, RRSP receipts or donation receipts, then all the software are very simple to use. So you can take UFile or like government's free website, Netfile. So they're all very simple to use, very straightforward to use. But if you have any complexity, I would suggest not to do it, because, like, first of all, you're new to the country, you don't know the system. It is so maybe you will leave a lot of things. Chance of wrong filing is more than chance of chance of leaving something on the table is more dangerous.
Right. There's another question. If you have a TFSA account and had no withdrawals in 2020, do you need to report in the year return? And if cash withdrawal few amount like $100, do we need to report it? Tax treatments for Canadian or USA dividends in TFSA.
So TFSA is a tax-free savings account. So when you contribute to TFSA, there is no deduction for it. And again, the assumption is that you have this income, you paid some taxes, and then you invested your tax-paid money into TFSA. So whatever happens within TFSA, there is no reporting required for that. When you take the money out of TFSA, there's no reporting required for that. The only danger in TFSA is that if you start trading within TFSA, it can lose its registered status, means tax-free status. And the second risk is that if you use it as a savings account or current account and you withdraw and you put it back, so anytime you put it back is considered to be contribution. And if you end up over contributing than your limit, then there is a heavy penalty for that. Actually, it's 1% per month penalty, which adds up to 12% per year plus interest and penalty. So it's very dangerous if you use it as a current account. But other than that, it's very, very safe kind of.
You have a very vast knowledge and a huge experience in this field. What are the common mistakes that people do while filing a tax? And if you want to suggest them and to avoid the consequences, what are those suggestions that you want?
Well, the biggest and common mistake, especially in the new immigrant space, is not reporting the worldwide assets. So in the tax return, like all software packages, page number 2, top corner, it says that there's a question: do you own assets outside Canada over 100,000 Canadian dollars? And by default, it is checked no. So a lot of people don't even notice it. So that is by far the most common mistake I've seen. People don't realize that there is something, and automatically it is checked no. So that's a mistake by software vendors. If they go to tax preparer, tax preparers are so busy during this time, they usually forget to ask that question, like, do you own assets abroad? But that is the most common mistake. A lot of people who come, like majority of the people who come to Canada, they have some kind of asset outside Canada. So asset means cash, stocks, bond, loans given to anybody, investment in companies, everything combined. If you have anything over 100,000 Canadian dollars, you are required to file a form called T1135. And government was not very serious about that form before, but in the last many years, they have become very, very serious. And penalty for not filing that form is minimum $100, and then starts $25 a day, and that $2,500 per year. So if you forget to file your form for 10 years, so do the math. So $2,500 multiplied by 10, and on top of that, penalty and interest. So it's very, very dangerous for not reporting. On the other hand, like if somebody says, I have only 100,000 and another $500, maybe just a little bit over 100, should I report? I say yes, you must report. If you have 95,500, again, you should report, because there is no penalty for over reporting, like overstating, because that is your capital. There's no tax for that. As long as you're not making any income, you don't pay any tax on that. And even if you don't report the asset, if you have any income on that, let's say $500 interest earned in your back home or any third country outside Canada, you are still required to report that income. So there is no reason not to report the asset, because that is your capital. So when you land in Canada, the fair market value of all your assets combined is your capital. It is tax paid. You can bring that much money anytime in your life. So there will be no questions asked. On the other hand, if you did not report, and 10 years later you say, oh, by the way, when I came, I had all this money there, like $5 million or $10 million. And now you want to bring it, the government will say, no, you earned it while you were here. And that will be taxable.
Okay,
so that is by far the biggest and most dangerous mistake most people make.
And very important point. I just wanted to know one more thing, like if you brought money and you are employed here, and if you are sending money to your own account in your or country of origin to your relatives, in that case, what is the situation?
There's no reporting required. There's no currency controls in Canada. As long as you're sending it through normal banking channels, it is all good. So whether bringing money into Canada or sending outside, there's no reporting required. As long as you're doing it through the normal banking channels, and as long as there's a proper source of the funds in both ways.
All right. And what are the mistakes that we see usually on documents? If we want to file something and you miss something, and is there any chance, second chance, that you get if you have wrongly filed anything?
That's a very good question, very useful question, and we do quite a lot of those actually. Since 2016, this activity has picked up because all the OECD countries, so they got together and they want to mitigate the tax avoidance by people who do it intentionally. But then there are a lot of people who do it unintentionally by mistake, honest mistake, not knowing the rules of the new country, right? So they said, okay, we'll give you one chance, but only one chance in life. It's called Voluntary Disclosure Program, so VDP. So anybody and everybody can file a VDP and correct all their mistakes, and all the penalty will be wiped out only for the last 10 years though. If you made a mistake 20 years back, you'll still pay a penalty for 10 years, and then the next 10 years will be wiped out. But it's only one chance in life, and one of the requirement for that is that it should be complete. That means it has to be final. You cannot come back again and say, oh, by the way, I reported this 100,000, but there was another 50,000. So that will not be accepted. Then the whole thing will be cancelled.
There's another question. What are the Ontario Trillium Benefit a low-income individual can have?
So Ontario Trillium Benefit is an automatic payment by the province. So they take your family income combined. I'm not good really, even I'm an accountant, but I'm not good with those numbers. I don't put them into memory. But they combine the family income together and they automatically send you. So you don't have to apply for them. You don't have to ask for it.
So are there any big differences among provinces? And what do you suggest? Like if somebody's from a different province, in that case, how to keep track of their regulations and their guidelines for filing a tax?
So each province has its own set of rules. For example, Ontario has Ontario Trillium Benefits, which is based and calculated based on your family income, number of members, and also how much rent paid or how much property tax you paid. Right? So they combine all these factors and computer spits out a number, and then they start sending you the payments based on your last year tax return, and they started from July of following year. For example, your 2020 family income combined and number of household members will determine your benefit from July of 2021 to June of 2022. And then next year it changes depending on your income and situation. But if you're in BC, for example, so they don't have Ontario Trillium Benefit, obviously. They had something called rent tax credit. So based on how much rent you pay, they give you the benefits. And then each city could have property rebates and stuff like that. So you have to know the local rules in addition to the federal rules. Each province is different. And a lot of people somebody may have questioned, okay, oh, I was in BC before, and then I moved to Ontario, which calculation applies to me? So wherever you are on December 31st, so that is your province of residence, even if you landed on December 31st. So that will be the province of your residence for tax purpose.
Right. So now we are in the conclusion. And is there any other thing that you want to tell our audience that they should know about filing taxes? Any specific tips that you want to give?
Well, I think at most basic level, it is important to file the taxes and then file them in time. So do not keep them for the last minute. Like that's a normal human tendency that, oh yeah, April 30th is 2 months away, so we'll file it later. So do it earlier than later, because CRA has better facility or better like availability of staff to process the tax return. Especially if you're in a benefit situation, you want to do it earlier than later because you'll be getting the benefits. And also if you're in a refund situation, it's more important to file earlier because you'll get actually money back from the government. And another thing everybody should be doing is to sign up for direct debits, direct deposits in your bank account. So that is very easy process. Again, when you're filing your tax return, give the void check to the tax preparer. If you're doing it yourself, there is a DD form, direct deposit form within the tax return, where you give your banking information and the money comes to you directly, comes very fast, like within 5 days, you'll see the money in the account. Versus getting a check, sometimes gets lost, and then it's really, really messy to get it back from the government.
Thank you so much, Subhash Sharma, for providing a insightful information to everybody who is joining us through Zoom or YouTube, or because this is a very important point and this is a very important topic. And as you know that this is the tax season, and as you said that this is the right time to file taxes. So from this platform, we'll ask our audience that it's the right time, and keep track of your all documents and receipts and all the guidelines and tips that Subhash shared with us. Again, thank you so much, Subhash, and thank you everyone who joined us through Zoom or joined us through YouTube, and all those who sent us the questions. We hope that you have got the answers. If not, you can connect with Subhash, and we'll be sharing the resources as well. And who got missed today's session and can watch us through YouTube. Again, thank you everyone for joining us today. And just wanted to let you guys know that this session was brought to you by Windmill Lending. This converting potential into prosperity. Windmill Microlending as Canada's largest micro-lending not-for-profit for skilled immigrants and refugees. Windmill addresses underemployment and skilled newcomers across Canada. and you can log on to this website, windmillmicrolending.ca, and get the information from this. And you can follow us on all social media platforms. You can follow us on Facebook, Twitter, LinkedIn, Insta, and also you can subscribe to our newsletter to get the latest information. All our upcoming sessions and all our previous sessions, you can go to newcanadians.tv, or you can go to our YouTube channel, subscribe to our YouTube channel, and all those who are in Canada can also watch us through Omni Television. And we'll be sharing some other information, and we'll come up with a new topic next week. So stay tuned, and thank you so much, Subhash, and thank you so much, everybody who joined us.
Thank you, Shreya. Thank you.